Hi everyone, and welcome to our webinar. Today I am going to introduce SYSTRONICS cash flow forecasting. Forecasting cash inflows and outflows is important for all businesses. Many of them use spreadsheets for that purpose. The advantage of using SYSTRONICS cash flow forecasting is that it uses already existing Sage 300 information to predict the cash flow. Cash flow forecast can be based on the existing accounts receivable and accounts payable invoices, as well as OE and PO orders. The application also allows to use recurring transactions, transactions associated with anticipated new businesses, and ad hoc transactions in the cash flow forecasting. Moreover, SYSTRONICS cash flow forecasting lets the user create actual Sage 300 transactions based on provisional transactions from the cash flow forecasting module if the forecast turned out to be accurate. Now let's see how the application actually works. I will open the Provisional Transactions Management Console screen, which is the central screen of the application, and most of its features can be accessed from this screen. The cash flow forecast is done separately for each Sage 300 bank. This cash flow forecasting is all about future transactions that will generate or consume cash. The cash flow forecasting uses the concept of provisional transactions. A provisional transaction is a transaction that exists only in the cash flow forecasting module and does not affect any other Sage 300 module or does not affect the bank balance at any point. However, entering a provisional transaction allows to see how the amount of that transaction will affect your bank balance. Let's say I want to create a cash flow forecast for my bank CCB, and I want the forecasting period to be, let's say, from June 1st, 2020 to July 1st, 2020. Let's assume this is the year 2020. Now, I specify my forecasting period and click the Go button. What I see on the screen now is the current balance of my CCB bank. The current balance includes the actual bank balance in Sage 300 plus all the provisional transactions that were entered for the day before my starting date. As I've already mentioned, we can use actually existing transactions in Sage 300 AR and AP to generate the provisional transactions. For that, let me open the Auto-Generate Provisional Transactions screen. Here, I want to generate provisional receipts from my AR invoices. So from the drop-down, I select AR invoice. Let's say I only want to include those AR invoices that have a due date within my specified forecasting period. So I specify my period here. And also, I trust my customers. I know that most of them will pay me before the invoice document due date. Let's say, just for safety, I will add 5 more days. And this day I specify here will be the date of the provisional receipt transaction auto-generated by the application. Here, when I click the Go button, all the AR invoices that meet the criteria defined in the Select By section will appear on the screen. And when I click Generate, provisional AR receipt transactions will be created for those invoices. Now here on the details grid, I can see the amount of the transaction, and I can also see the transaction date, which will be the date of my provisional transaction. Now I can edit both of those fields, but let's say I'm happy with what I see, so I will just click Generate. Okay, I have 16 transactions generated. Now when I go back to my screen, Management Console screen, I can see how those generated transactions affect the current bank balance. Okay, now we can see the generated transactions on the Management Console screen. On the right, we see the running balance of the bank. We can see that up to this point I have negative balance, and from that onward my balance is positive. I can also see at which point my bank balance breaches the overdraft limit. The transactions are highlighted, the balances are highlighted in pink. Now, I also mentioned that we can use OE orders to further generate cash inflow provisional transactions. For that, I will once again open the auto-generate provisional transactions screen. And this time I will choose OE order as a transaction on which to base my forecast. And let's say that I want the transaction date to be the order date plus, let's say, 10 days. Although there are other options available, such as the order date plus average days to pay, order date plus term, expected shipment date plus average days to pay, expected shipment date plus term, and the specific date. Please note that Cashflow Forecasting supports only single payment terms with dates from the invoice date or end of next month types. So if your transaction has any other term, no date will be added to order date or to the expected shipment date. But let's say I want my provisional transactions to have a specific date. Let's say June 29. And I want to include all my sales orders. So I'm not selecting anything. Okay, I can see that I have 5 orders. I can see what will be the amount of generated provisional transactions. And since I have defined a specific date for the provisional transactions, all of them have the same date. Again, I'm happy with what I see, and I can click the Generate button. The transactions are added on my Management Console screen, and I can see the running balance of bank changed. Unfortunately, doing business is not just about collecting cash, but also about using that cash. And that's why I will once again open the auto-generate provisional transaction screen, and this time I will generate provisional payments from my AP invoices. Again, I have several options for my transaction date. That's the invoice due date, invoice date plus average days to pay, invoice discount date, posting date, or specific date. Let's say that I'm sure that I will be able to pay on time, so I will select the invoice due date as my provisional transaction date. And I only want to select those AP invoices for which the due date is in my selected forecasting period. So we'll just specify that. Again, I can see the documents from which provisional transactions will be created. I can see the amounts. I can see the provisional transaction date. I can also edit information on the screen, but let's say again I'm happy with what I see, so I will simply click Generate. Okay, 17 transactions were added and my balance has changed accordingly. Okay, we can now see our running balance that includes AP payments, provisional payments. I can see that I have breached my overdraft limit multiple times during this period. We'll do something about that a bit later. Let's just also include the payments that will be done based on the PO orders I currently have. So one last time, let's open the auto-generate provisional transaction screen, and this time we'll select PO orders. And let's say I want to include only those orders that have order date before in my specified period. Okay, I have this many PO orders that meet the criteria, and let's say I want the provisional transaction date to be order date plus, let's say, 10 days, although I also have a lot of other options. So I can click generate, and 7 more transactions will be added to my forecast. Okay. Let's say that I also want to add some recurring transactions in my forecast. For example, let's say that I have a new subscription for which I am expected to pay on monthly basis. For that, I can go to the recurring transaction screen and select and create a new recurring transaction. Let's say I know that my subscription has started on May 1st, 2020. As I've mentioned, my payments are monthly, so I'm selecting a monthly schedule. I am paying to a vendor for the subscription, and I will simply select the vendor. And I know that my monthly payment amount is, let's say, 100 Canadian dollars. As I click Add, I create the recurring transactions that can be used to create recurring provisional transactions. Let's say I want to generate this provisional recurring transaction until 1st of July. I specify the date and click Process. Okay, 3 provisional transactions were created. Now my forecast will also include those transactions. Let's say that I was informed that one of my customers will not be able to pay on time. So it's a good customer, and I know that they will pay me soon, and I've agreed to wait a bit longer for the payment. However, I do not want this transaction to be included in my forecast because I note that I won't have this amount of cash added to my bank balance. So for that, I can simply choose to delete a provisional transaction from the Management Console screen. The selected transactions is now deleted, and the bank balance is affected accordingly. However, let's say I know that another customer will not be able to pay the whole amount of the invoice, but only part of it. Again, I'm okay with that. It's just that I want to make corrections in my forecast, so I can change the amount to be received, and this will be reflected in my cash flow forecast. Let's say that apart from the transactions that were provisional transactions that were based on already existing transactions in Sage 300, I also know that there will be other transactions that will affect my cash flow. It's just that there is no any document in Sage 300 on which I can base it. For example, I know that one of my customers will send a prepayment. It's just that there isn't an invoice to attach that prepayment to. For that, I can create a provisional transaction entry manually. Let's say I know that the prepayment will be received on June 5th. And I know that the prepayment amount is going to be $1,000. As I said, I don't have the invoice number in my system yet, but I know that it will be this document number, so I can allocate the entire amount to this document, which again does not exist in my system yet. I can click Add, Save, and the provisional transaction I've created manually is also added to my forecast. Let's say that I also have a new project and I know that it will be carried out in the specified period. So I also want to see the cash inflows and outflows associated with that project in my forecast. So I will just click the New Business Entry button and specify the receipts and the payments associated with that new business. Let's say that I'm expecting to receive cash on 20th of June. I specify my customer. Let's say I'm going to receive $20,000. And I also know that I will have some expenses associated with the project. Let's say on 10th of June, I will be paying one of my vendors $5,000. I can now generate provisional transactions for this new business entry. The transactions are now added to my forecast, and the balance is changed accordingly. Now, let's say I have already entered all the provisional transactions I'm expecting to have in this period, and I can see that, okay, I breached the overdraft limit a lot, and I don't want that to happen since I do not want to pay additional fees to the bank. That's why I can do the following. I can create a provisional transaction that will transfer some money from another bank to this bank. That way I will be able to avoid paying more fees to the bank. That's why I will select provisional transaction entry screen. I will select bank transfer as a transaction type, and let's say I will transfer 20,000 Canadian dollars from my FC bank to my Trent bank, CC bank. Let's say I want the transfer to take place on 2nd of June. I click Save. And I can see that I'm not reaching my overdraft limit anymore. Okay, I'm happy with what I see, and all the transactions, all the provisional transactions that I was anticipating to have, I have on my screen, and I can now print the cash flow forecasting report. Again, the report can be accessed from the Management Console screen. Let's say I want the report to be printed in the detail format, so I can see all the provisional transactions that create my final balance. And let's say I also choose to include all the provisional transactions. Please pay attention that you can also include a graph, which will be a visual representation of the bank balance change. Okay, you can see the report printed. Actually, I have two banks selected here, not just the CCB bank, but also another bank. It's okay. Here, on the last page, we can see the graph representing the bank balance changes. The blue line is for the bank CCB on which we were working. Basically, I have shown the entire functionality of the application. Let me just show you two more useful features. So we've agreed that cash flow forecasting is all about the future transactions. In case of cash flow forecasting module, about the future provisional transactions. However, it may happen so that I create a provisional transaction for a future date, and that date comes and passes, and my provisional transaction still remains in the system. Obviously, I do not want to use expired provisional transactions in my forecast. So to identify those transactions, I open the provisional transactions alert screen. And here I can see what are the expired transactions, provisional transactions as of the session date. What can I do with expired provisional transaction? If my forecast turned out to be inaccurate and this transaction didn't take place actually, I can simply delete the provisional transaction by selecting the transaction and clicking delete. However, if my provisional transaction turned out to be accurate, which means that actually I have received the payment from the customer, let's say, I can use this provisional transaction entry screen to generate actual Sage 300 transaction. So let me click on the generate receipt. I select or generate the batch number to which the AR receipt will be added and click generate. Okay, I can see the new AR receipt entry. If I'm happy with what I see, I click add. Now the provisional transaction in cash flow forecasting is now completed, which means it's not a provisional transaction anymore. An actual transaction has been created from it. And for the second transaction, let's say I want to delete the transaction since my forecast was inaccurate. I can simply click delete. Okay, now I do not have any expired provisional transactions here, so my forecast will be accurate. That's all that I wanted to tell you about the application.